Good evening, everybody. Welcome to the August 5th edition of the Locke InYour Success Trade and Market Updates. The market movement last week was pretty much as expected. We got a bit of a down move, and just as we were saying, last week we were coming into a resistance level, and we came into the top of the channel, and as predicted, we came right into the top of the channel, and we turned back down. I was expecting a little bit deeper pullback, maybe down to the 1350 level. However, we kind of hit the moving average and bounced here with the good news on Friday, which really wasn't much of an excuse for the market to bounce. But keeping with the theme of things, this market movement is nothing that's unusual, and really it's been a easy market to predict for a chartist. Because it's been acting fairly predictable. So we're coming back up into this resistance level here. The question is, we are getting close enough to our highs for the year, and I would expect at some point that we're going to make a run for that. Whether we have a blow-off move and we make a run for that now, this week coming up, or we just come into this resistance level and then come back down again. Who knows? But if we're playing the channel, we'd pretty much be going short here. However, like I said, it looks like we might be setting up for a run to about 14 and a quarter. And the reason I say that is because we've been hitting the bottom of this channel, hitting the top, coming close to the bottom, coming close to the top, hitting the bottom, hitting the top, and here we're mid-channel. We turned around, and we got a higher high here, and most of the up moves have been at least 2 days. Here we have 3 or 4 days. Here we have 3 or 4 days. Here we have 2 days. And this is 1 day. If we do get an up move into this channel, then that wouldn't be a surprise. But in general, we may get one more cycle here. We may cycle down one more time before we come up there. So we're kind of at a pivot point. And I believe it's going to be news driven. If I have to stay with the channel, which would be my first tendency, I would say we're near topped out. We may run a little bit higher, and then we roll back over towards the bottom. Keeping in mind we may make a run higher. So let's take a look at some of the other indices while we're at it and see what they're doing. So let's look at the Dow first. Same deal, right? We got this nice channel. We expected a move to the top of this, and then for the markets to back off. Again, I did expect that we may back down a little bit further, and we turned a little bit early. And this is telling us the exact same thing as the SPX. We might be looking for a run for these highs, but devoid of that, and that would happen if we have some sort of a good news event early in the week. Other than that, we're probably going to roll over and come back and take a shot at this on the next cycle. And let's look at the NASDAQ before we finally look into the Russell and see what that's doing. Alright, so here's the NASDAQ. Pretty much the same scenario, except the NASDAQ's been a little bit weaker. It hasn't been touching the top of its channel. But again, we come halfway down the channel, we bounce. If I was looking at just this index here, I'd be saying we'd be going a little bit higher. That's what that's telling us. So we'll have to see where this goes. If we roll here, again, that wouldn't be a big surprise. And push back towards the bottom. And last but not least, and notice too, all three of those indices are uptrending, right? So let's take a look at the Russell. And here we have the Russell. Now, the Russell longer term is still uptrending, it's still bullish. However, its shorter term trend, unlike everybody else, is to the downside. So, this itself, the fact that we don't have all four of these major indices pushing in the same direction, is a sign of general weakness in the marketplace. If the SPX and the Dow decide that they're at the top of their channel and they do not want to make a run for the year's highs, then we're in the perfect place to roll back over and come and test the support area down in here. If they do decide to make a shot for the yearly highs, you're going to see probably the Russell come at least to here, and it's going to depend a little bit on how strong the Russell is in comparison to everything else. So if it's relatively strong, in other words, if we're getting 10-point moves in the SPX and we're getting 15-point moves in the Russell, then we're going to make a run for this area here, about the around the 810 area. If we're getting larger moves in the SPX, we'll probably shoot up into here, and of course if it rolls over, it's just going to roll over. It's going to come down into here, this lower trend line, and then probably make a shot for this trend line here, or possibly even this one. I would not expect the Russell to come higher than here unless the indices, you get some kind of really good news and the indices break over the highs for the year. We're probably going to have the Russell come up and test its own highs with that breakout, and when that happens, it's going to be a very strong move. You'll see if everything breaks out, this is going to have a very strong move to the upside. However, what's more likely is that everything else comes up to new highs. The Russell ends up either here or possibly up here. And then as the SPX, let's go to the SPX. If it takes a shot for a new high and it rolls over, it's probably going to roll all the way at least down into here again. If that happens, you will probably see, and this is longer term, this is going to happen this week. You'll probably see this shoot up into here, and then we may break this trend line and test these lows here at 730. So those are my thoughts on market movement and what's going to happen. Of course, news can change everything, and if other things happen, but the divergence in the indices is a sign of weakness, and unless we break to new highs on the SPX, new yearly highs on the SPX up into here. Actually, probably, let's go to a long-term chart for a minute. Yeah, unless we break to new yearly highs on the SPX, the Russell probably isn't going anywhere. If we do break to new yearly highs on the SPX, this thing is going to start screaming. So the SPX is the thing to watch right now. Alright, so let's take a look at our trades. This here is the August M3. We are now, let's see, 11 days to expiration. The timing of this move is getting important. If being 11 days to expiration, we'll have 11 days for this cycle to work itself out. So if we break up, we figure that's 1 day. If we break really high, it's 2 days. And it's going to come into here. It's probably going to roll back down to around the 790 area. So if we break to this high trend line, into that, and we come back down to 790 area, we'll do okay. So, but not great. We're not going to be in the chunk of our graph, which I do not like. If we come up here and this trend line holds and we roll back over, we're going to be at the 780 level. That's or 770. That's going to be very nice for us. It'll allow us to come in here with very little downside risk. We'll probably take this off if that does that. I want to basically pull this position when we hit 770. So if that comes in and we pull back into the 775 area, whether we're at profit target or not, this will probably go. In the event we run up to 810, it's probably only going to run back to 790. So I'm going to be looking at bringing some of these butterflies, starting to bring some of these butterflies forward if we do indeed break this level. If we start breaking 800, I'm going to go ahead and I'm going to plan for the market closing right in this little tight range right in here, which is right around the 800 level. And obviously I don't want to close there the way I'm positioned, so we will reposition for that. But otherwise this trade looks fine. let's see, what did I make for a move since the last update? I did put these two verticals in, and I did it on Friday. Thursday would have been a really nice day to pull this off. We were down in this area here. The trade was up probably, I think it was around, it was showing around $2,000, and I think some of that was funny money, or the line was a little bit higher than it should have been. I think if I closed it out, I probably would have got around 1,800. I wanted 25. I thought that we should, well, if I was looking at the Russell, I should have known better, right? The Russell came right down into trend line and reversed. So this would have made a lot of sense if I was just looking at the Russell to pull that day. If I'm looking at the SPX, I'm saying, I think it's going to pull down a little bit lower. And if I looked at the other indices, it looked like it was going to pull a little bit lower. So I was kind of torn that day on whether I should pull this trade or not, because I wasn't at profit target. If I was a little bit closer, I probably would have pulled it. I was hoping we'd hang down here for another day, watch the other indices come down, maybe touch this red trend line down here before it took off. But it took off, not a big deal. We drew down about $1,000 off our maximum profit levels. Again, no big deal. And here we are sitting, up around 1,200. We'll see what happens in the morning. Realistically, if we back down, we go back to the position we're in now. Okay, so Friday, what I did is I bought a 760, 780 vertical and a 760, 790 to kick ourselves out. And if we stay or drift down into here, and we'll see what kind of a gain they give us. You'll probably get where the market pressure comes off, the upside market pressure. You may see a gain significantly more than it shows. If that actually happens, we may just pull this. But so we're thinking about pulling it off as soon as we get a good profit out of it. And if the market continues up, then we will bite it a little bit more. But everything looks fine here. Certainly not in any trouble at all. Okay, so let's look at the other position we have on, which is going to be the bearish butterfly for September. And here that is. If you remember right, we started this at 760, and we have a reference point at 760. We put it on Friday morning, and that was this day here. That was of last week, and the market went up very quickly. We had a delta theta ratio issue the very same day we put the trade on, and we ended up rolling the 760, taking a bit of a loss on it, but not too bad, and taking it up to 780. We are planning to add to the position at 800. And that would be the scenario where we actually come up and we break this trend line and move into here. We'd be adding an 800. I would be surprised if we break this area, so I highly doubt we're going to get in 3/3 on this month. It's possible. It may run up into here and back off. If that indeed does happen, that would be very good for us. Even if we only do the 2/3 and it runs into here and backs off, that's still very good for us. So I really like the setup for the month. Other than the fact we're paying too much, way too much for entry. I'd much rather be around $10, but with the extremely low volatility market conditions, I don't think, that's probably the best you're going to do. So that's that. And so all the positions are looking fine. I'm looking for a good opportunity to exit the August M3 because we are very close to expiration. And I will keep you updated with any changes. So have a great week, everybody. Good night.